it does take us to our talk of the tape. Is it time to add to tech or trim it? One famed investor doing both today. So let's bring in Deepwater's Gene Munster and Hightower's Stephanie Link. Find out which moves make the best sense right now. Steph's a CNBC contributor. It's good to have you both. Of course, when I say Steph, a famed investor, is doing both, I'm alluding to David Tepper, whose 13F came out today, and it was really interesting. He is increasing his China tech holdings, and he's taking down a little bit his mega cap U.S. holdings in those stocks, I guess is best said. Meta and Amazon, he cut both of those, but a big lean into that trade that he really liked in in China tech. What do you make of it?
Well, I think China technology and China in general has underperformed the markets for the last several years. If you're taking a bet, though, on China tech, you have to expect volatility, Scott, because the transparency is really not great for all Chinese pure play companies, not just tech, by the way. The disclosures are not as robust. That said, these stocks are extremely cheap, so expect volatility. I mean, I think you can find other technology stocks that have lagged here in U.S. multinational companies within technology. But obviously, he believes very strongly in the growth trajectory of the Chinese market at the moment.
Yeah, I mean, Gene, we went from uninvestable for many investors here to maybe a better opportunity. Do you see the landscape shifting at all?
We're not there right now, but this is top of list for us to think about what happens with the relationship between China and the U.S. Tariffs, of course, the geopolitical, what happens with Taiwan, all this stuff that's been so well trafficked. But if you play this forward 3-6 months, there's most likely going to be just a better awareness for investors about how this path forward is. In other words, is that I think clarity for investors about whatever those tariffs look like, maybe potentially actually growing a little bit closer to the U.S. from a geopolitical standpoint, that is going to unlock some of that multiple. And I just want to put a finer point on Steph's accurate comment about these stocks being cheaper. They average about 10 times 2026 earnings. This is the China tech companies, and that compares to the Mag 7X Tesla at 25 times. And so the disclosures aren't as good. Steph's absolutely right, but there is a big enough gap there that this is, I think, any investor, present company included, that has been ruling these out. We need to go and start doing more work on these.
Gene, Deepwater owns both Meta and NVIDIA. Let's start with Meta. What do you make of this run? Why is it happening with the strength and the consistency that it is?
It's just cheap. And not only cheap, but the visibility is so high. So on the cheap side, it trades at 25 times calendar 26 and is growing earnings in calendar 26 about 15%. The rest of the Mag 7 is growing earnings about 10% and trades at a similar multiple, a 26 multiple. And second is this company. I think investors are becoming more comfortable with the concept that this is as addictive as a product can be. Their daily active users, almost 4 billion in the most recently reported quarter. That's up 5%. Same growth rate as the September, 7% growth in June. Scott, we've seen just this steady growth on that huge number, and that is their playing field to extract what obviously will be more content built by AI and better targeting with AI. And so just as a Meta investor, this is a company that, even though it's had this spectacular run over the last couple of years, we can sleep well at night knowing that it is highly addictive and they're going to find ways to make more money within that context.
Steph, I mean, look, you're a value investor. I mean, your history with this stock is so interesting. You lived through the worst year ever, and you also had its best year ever. But you no longer own Meta. Gene says it's still cheap. Why haven't you bought it back?
Well, I kind of feel like I missed it, number one. Number two, I made a lot of money in the name, and I put it elsewhere. In fact, I put it into Amazon when Amazon was doing nothing for like 2 straight years, if you go back 2 years ago. And I actually today would be buying Amazon over Meta, because I do think that those results last week were quite good. Expectations were super high, but when you have U.S. retail, you got a lot of ways to win in Amazon. You can win on the retail side. They had 10% U.S. retail growth. Margins were the best since 2004 in the U.S. retail piece. Margins also expanded internationally by about 400 basis points. And, of course, AWS growing 19%. I know the guidance was lower, but that was really FX and a leap year, difficult compares. So to me, I think at about 14, 15 times EBITDA, when it trades at about 18 times historically, that's the one I want to be putting more money into, and I will.
Gene, Amazon over Meta. What do you think about that statement?
I'll take Meta again. I think that this is the probability that this gets multiple expansion is higher than Amazon. I think that ultimately we're going to see a probability that the numbers exceed expectations is higher. We saw their guide with Amazon a little bit soft for the March quarter. They always give a pretty wide guidance, but my general sense is that I think Meta, despite its big move, is going to continue to outperform. I would just highlight another arc that you touched on at the top. This is related to Amazon and Meta, but I believe that these mega caps are going to continue to do well, but I think we're going to see more performance in 2025 in those companies that are below $500 billion in market cap. And so you can have both. You can have mega caps continuing to perform well, but I think that you are going to see a little bit of a shift here towards some of these. The context is frontier tech. Investors are well traveled. They're going to continue to own the mega caps, but I think these frontier tech names are going to become more impactful in terms of performance over the next year or 2 years.